The following is a presentation of TFNN. The Global Market Pulse. With your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. It's Wednesday morning in the States, Wednesday night here in Asia, and we're taking a look right now at the 10-year Treasury. And we've got a little technical damage starting here. And we're looking at the 10-year Treasury on our screen. And as you can see, our weekly profiles, the reason we're bringing this up is pretty impacting to me. 126.0910, that was kind of the area that we were focusing on. We're getting a little bit below there with a little bit of noise factored in. We're not, terribly edging down. But, again, this is, something that we're going to pay attention to, as the U.S. stock market has really enjoyed the Republican wave of wins, if you will. And I'm not going to comment too much on politics here, but it's things with a joined instead of disjoined House and Senate, and possibly President. Who knows about that? There will be a lot of things that the business community, I guess, has hopes and dreams on that will, get done, maybe clear out some of the nonsense from before that the business community was, having issues with the possible Democrats and some of the, regulatory things that were going on. The market likes that. And rates, therefore, have edged up slightly. But that's basically that natural reaction with the broad market going up. Here's the situation on the S&Ps. Let's just kind of pick some things out here as we look at this. We talked about, probably not getting too aggressive and trying to sell these weekly unfair highs and waiting until we got back above. And that was based on, not a Republican, victory, if you will, but based on market breadths being positive. And that market breadth changed around on the weeklies, the 24th, and on the dailies about the 17th. And that was, back in this week right here. So, when that breadth starts turning a certain way, we kind of start passing on one side of the marketplace. And since that breadth was pretty positive on all levels, we had kind of passed on shorting this basically from that day forward. Here's a weekly situation again, and the daily, this is kind of what we're up against here. We've got an inflection point, a new profile appearing around this 2019-25, but I really don't see, because of the breadth situation and not a lot of conflicting signals here, I don't see this really backing off at this stage, and I see it going higher, believe it or not. Notes and, the bonds and the notes are kind of pressing, getting some momentum, compressing against those unfair lows, and now they're starting to drift a little lower. So my call on the notes in general in the 10-year is kind of wait and see. If we can get back above 26.10, then, it's going to be okay to kind of nibble on the long side again. But right now we're just kind of edging down. We've kind of broken some support right now. And if the market edges higher, the notes could just by default head a little lower. So I'm bullish on the market, and I'm kind of in a wait-and-see mode on the treasuries, trying to still not short them, just kind of stay away from them for right now. Let's take a look at something else that we had been talking about from the, from the side of the fence, the short side, that is. We talked about this yesterday, but, and we also talked about, a new flood of oil hitting the marketplace, possibly coming from different angles. And now you've got, the OPEC guys meeting, and the last time, oil really, in my opinion, right now, may freak some people out, and it may not have a bottom anywhere near here. We obviously okay to be short, not okay to be long below this $80 a barrel area. And if this looks familiar, this is kind of the way the Treasuries kind of started coming into those unfair lows on the daily and the weekly. Now we're sitting below. Crude oil obviously has a lot more factors going on right now. But, again, I think it's still okay to be short, not okay to be long. Here's the long-term weekly view on crude oil. Again, we talked about yesterday a little bit. 91 was kind of that breakdown neighborhood there. We're trading about $15 a barrel lower right now, which is about 20% reduction in crude oil prices in West Texas. So here's the 240s. We talked about this profile yesterday, and bottom of the box 76.35, 78.39. So any kind of rallies up into this 78.39, I think, have to be sold, since you're still possibly going to trade with the trend down. Kind of retested these 240 unfair lows a couple of times already in the past 8 to 12 hours. But again, I think we could head lower on crude oil, and I'm still passing on any type of long signals right now, waiting for some new profiles to appear or breakdowns below 76.35. That's the take on crude oil right now. The good feeling of the markets, if you will, are spinning into, and we got to take a look at the yen. The new comment, actually wrote this down. No limits to our policy tools. If that sounds familiar, what they were talking about with the euro a while back. So here's the yen, and we talked about a 115 target, and we've reached a high today of 114.78. So, we talked about this thing kind of forming a little flag. It didn't have to wait too long here, and passing on the shorts. Zero reasons to short this thing. Zero reasons to short the yen based on technicals and, in my opinion, fundamentals at this stage. Here's the weekly. And this has been the coolest trade on the books here. Me and Tom had talked about this for a while. What's the best trade on the books? And we talked about it actually all year, is get along the yen and around that 101.33 area. Use it as a fence with stops below. And we are literally, and again, we talk about, times when you can make your whole year in a short amount of time with the right product, lose a little, lose a little, lose a little, make a lot. This is the make a lot version of that little phrase. And getting back, retesting some of those things, and then profiles before that, very long profile, very powerful, and just a little bit of an education. When you have these profiles really extended, those inflection points mean so much more over time. So as you can see, kind of expanding this out, going back and retesting, and then kind of leveraging off the new profile. Remember, this is kind of like an exponential moving average. The most recent profiles are weighted, as far as inflection points go, a lot heavier than inflection points as we go back in the past. So that kind of held true here. Then we had the new profile up here. Then we retest. Then we move higher. Now, what do you do now? Well, we've been talking about staying long the yen, and that's obviously affected the dollar, which is obviously kind of spun into other currency little things that we're going to talk about. But, this is the daily. The latest breakout above 108.39 was to be bought. And here's the 240. So, in the theme of what do we do now, we talked about using these short-term levels as inflection points to leverage on the long side with stops below. Talked yesterday about the maximum, short-term support around 110.77, but we talked about that probably wasn't going to be, approached, and you might not have any better opportunities than these upper levels right now. Now, looking at this, I say, well, good Lord, John, we've kind of gone a long ways in a short amount of time. They are telling the world that, they are rigging their marketplace. It's amazing, but they are rigging their own marketplace. There's no mysteries about what's going on here, and they're going to create inflation, being the Japanese. That is numero uno MO in their mind, all right? And they're not going to not let it happen. So this may be something that even will go higher. We talked about 115 as a target, and I've got some reasons for, placing around 115. But, if you guys listen to Basil and Steve and a couple other guys on the network, maybe they'll have, maybe some better information about targets on this. I just use our profiles and some of the other indicators that I look at. I only show a few here at times because I want it to be pretty cut and dry, black and white, and not do all these what-if scenarios for you. And I just use profiles to regulate the trade. And I'm a big fan of trading inflection points and, letting things breathe. Well, this is one of the things we wanted to let breathe. But, again, I think, Basil and Steve and a couple other guys on the show, on the network, may have some thoughts about the end that may provide even a little bit more sanity on some targets, if you will. Got about 2.5 minutes before the end of the first break. Before I get to let's just kind of look at the euro. We've been pretty correct on these currencies lately. Long the yen, short the euro, short the British pound. British pound got, another dose of, devaluing news, if you will. And here's the euro situation, just languishing and headed lower. We talked about 120 ultimate targets down there. Here's the weekly, and this is kind of cool because, we closed below, went back and retested, and that high this week has been 125.77. That inflection point is 125.74. All right, so when I'm just going to call that almost to the tick there. When you have these closes and then retests in the trend, direction of the trend, those are super powerful setups. I mean, I don't even care what's going on with the other indicators. You got to take shots almost when those things happen like they are. So that's the situation on the euro, and as you can see, that retrace back up into that weekly unfair low happened yesterday. I'm just going to pull up the 240s. There you go. Okay. And, that's, in my opinion, where some great battles can be, picked there. All right, let's take a look at the British pound really quick. We got about 40 seconds, I believe. Here's the weekly. Again, very similar situation. First time we've broken below. Talked about selling breakdowns on the pound, and those two inflection points were lining up pretty cool on the weekly and the daily, and then we got a decent high probability trading opportunity. We were trying to eliminate the long side on the pound just because of all the overhanging fundamental news out there, and my feelings that we're going to head much slower on the euro and the pound. And here's the short-term situation. It's kind of cool how it all lined up around that 159.51 on the short term. The daily 159.80 something, and then the weekly 159.52. So that general neighborhood now is going to be used as resistance. We'll be right back, folks, in a couple of minutes.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Think or Swim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. Michael, can you take a look at the remote desktop connection? We're having problems with the charts right now. Let me try that one more time, guys. Sit tight. Okay, we got them back. Sorry. Here we go. And there's our chart. Man, gotta love TFNN. All right. It makes it easy when things go wrong. Oh my goodness. Did you just log in? Don't do that. Okay. Hold on, guys. One more shot here. We're going to have our charts back up. And we're going to take a look at the Australian dollar. This is something else that's kind of been on the radar screen. Let me get our chart back up here. Okay. We're going to take a look at the Australian dollar. Again, this is the British pound. That kind of inflection point neighborhood was really cool to break down below. Thanks, Al. And here's the situation on the Australian dollar. We talked about passing on longs and trying to get on the short bandwagon on the Australian dollar. Now we've broken down 87.19, those weekly unfair lows, and talked about passing on these longs as we broke above, a little bit above daily. So, let's just not pay attention to that. New leverage point, really cool a couple of days ago. And I want you guys to look at this again, another prime example here. Close below, retest. Close below, retest. Boom. Those inflection points are pretty powerful. You don't always get the retest, but when you do, you got to, it's just like going to, playing, I don't want to say gambling, but when you've got the odds in your favor, and this is, in my opinion, is putting some odds in your favor, you've got to kind of take advantage of it. You've got to give yourself a little bit of noise factor. Now the Australian dollar has eclipsed these recent lows. We're getting below on the weeklies. We're definitely technically damaged on the downside on the dailies. And here's the situation on the 240s. So in my opinion, not a lot of reasons to go long the Australian dollar right now. I think it's eliminated one side of the marketplace for you. Here's the daily again. It's going to give you a clear picture. And as you can see, I mean, the Australian dollar, there's some fundamental stuff out there too. I mean, a while back, the Australian Central Bank, they stated that they thought the Australian dollar was not at the right level for competing. So, you got to kind of remember that, we've enabled every other country in the world to think that they, it's okay to manipulate their marketplace and to do what they have to do. And with China having some issues, which Australia is pretty closely tied into, and those comments, it's a race to devalue currencies these days. And ours is going straight up over here in the U.S. So as a last look at currencies, let's kind of get into the dollar a little bit here. We talked about not shorting the dollar and buying breakouts and buying support. And looks like, here we go. Should be coming up here. Well, here's the short term on the dollar. We talked about using some of these levels, 87.28. Well, we're not. Well, okay, here we go. And here's the situation on the long term. Get the charts back right here. Okay, waiting for our levels to pick up here on the weekly. Let's look at the daily. We've got our levels there. Okay, here we go. 85.96. We called this 86 general neighborhood, closing above and then never looking back. So, how did we trade the dollar? We talked about this a little bit, not taking these shorts on the technical breakdown here and being able to wait patiently until, we either reach some inflection points below or break out above profiles above. And the breakout above was something we had to take, just turn the rinse the same way. We got to take it. We got to take it. And not a lot of conflicting information here to not be long the dollar. So, it definitely helped by some of the things going on globally with the currency world. But, that's where the dollar stands. When we come back, we're going to take a look at a couple of other usual suspects. There's still a lot of earnings announcements out there, and we're going to talk a little bit about stocks in play, even though I think indices and currencies are possibly, what traders are focusing on right now in general. So we'll be right back, folks.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. Just going back to the S&Ps a little bit here. Just want to show you that this morning we've obviously climbed a little bit higher, and that was after. Let's see, yesterday, today. Okay, so we've eclipsed yesterday's kind of closing area. Obviously moving a little higher, sitting on recent. This is a 60-minute chart of the S&Ps. Things on their highs want to go higher. This is kind of, in my opinion, a foregone conclusion. So the thing that, I always look at markets also this way. Any type of instrument that I'm looking at, I'm always looking, okay, if all things are pointing to this thing kind of breaking through some profiles, which it's currently doing on the weekly and almost ready to do on the daily, and, this type of action right here, this is our daily, I always try to consider, what if I'm short, and what am I going through mentally if I'm short? I'm terrified. All right. So, there's a lot of people out there that have been trying to stand in the way of this truck. We had the market breadth turn, and we kind of switched gears here, gave back some of the short profits that we had at 200 points from the highs on September 19th, but that's okay. Picking bottoms is difficult. We stayed in that trade. We made quite a few points there, but as that had changed, and I'm strictly speaking of, this little situation right here, this kind of speedometer, if you will, on breadth, that's showing you, green's positive, blue's inside, and red is negative. And we're showing you the thickness of the amount of instruments of the S&P 500 that are trading above, within, or below profiles. That's how that's kind of calculated there. But as this had changed on a long-term basis, it was, hey, the short scene's over. It is what it is. And now, if I'm short, playing around up here, is this really the smart thing to do here, is to be on that side of the market? All things considered, what we've been talking about, probably right now, no. So even though we've got a new box appearing on the daily, I think the odds are still for this to go a little bit higher. And, considering a lot of people are going to wake up and want to, not feel like they're missing anything with the Republican situation going on, we may have a market or a population that wakes up and wants to buy stock today. So that's the situation on the S&Ps. Let's just look at the NASDAQ really quick. We're also showing on this particular scanner now NASDAQ breadth, along with all the other things that go along with the scanner in general. Positive, positive, positive. And on the daily, on the NASDAQ, nothing to talk about there, nothing to hang your hat on the short side. We've blown through weeklies a while back, last week in fact. And here's the situation on the short term, nothing to key off of there. So, no inflection points. On the S&Ps, at least you've got, if we blow through that DMZ between 14, 15, 16, 17, 18, get through all that, at least you've got that inflection point area to look at as support. The NASDAQ's just, kind of out of control up here. So, again, this is okay to be long, not okay to be short the NASDAQ. And, that's just the way it goes. The DAX got some new information here. Talked about that 93.06, 93.20, trading 93.15 right now. So we've kind of here's some new pro here. And by the way, this profile is in the marketplace. That's generally a bullish sign. It feels well above, and our price action, that'll be a bearish sign. But right now we're not moving up, and we may blow through that and close above the 93.06, 93.20 on the DAX. Caught it short here. It was definitely something to pay attention to in a situation you could pick a battle around it. We reached the low 91.47. So, not, what is that, 70 points, 75 points on DAX. If you trade that, you know what the point levels are. Okay, we're losing me again on tech. How about the audio? Is the audio okay? Just getting an update here. Okay. Michael, can you check the situation here on the lines? Okay. Noted. We'll try to figure out our technical issues here. Okay, so again, the DAX, now that we've got a profile appearing below, this is kind of a bullish sign. We've kind of crowded this of it, which provided some kind of trading opportunity. Now we're back at it. This may be in a kind of another move up territory now too, but I think this should be off of that satisfied, at least on a short-term basis. Here's the 240. We lost. Hold on here. Got it back? Okay. What? Okay. Got weird connection here now. Let me. Okay. So DAX, you can start 94. So that's my move higher now, based on something that we talked about. I'm trying to get this. Okay. So that's what the deal is on the DAX. Again, apologize for the technical issues. We want to take a look at gold really quick because gold's made it a leg down. You know, we talked about the let's reconnect that. Is that okay with you guys? Are we back? Okay, so we're back. We're back on. Okay. Okay. All right. So situation on gold, and we talked about getting excited about trying to pick any bottoms down here. 12.6 was kind of generally daily. We kind of focused on opting out below 12.18. That was kind of the powerful, close below, go back and retest, and not collecting information here on gold on the short side. So again, what we've tried to pay attention to, I'm having some technical issues here, guys. I apologize. What we try to pay attention to lately are the 240s, and as you can see. As you can, I can't move my charts right now. All right. Okay, as you can see, use profiles to regulate this trade down. Really hadn't had any reasons to go long this thing after breakdowns on the longer-term time frames, the 12.18s and the 12.06s of the world. Again, it's been sell, 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 and the latest breakdown sell was 1164. The only time I think you're going to get some confirmations that it's okay to put your toe in the water on the long gold again is if we break any form of profiles. And right now you don't have anything there. But it's kind of the can I get these charts to work here? Okay. So we're kind of turning into a really hopeless case on the long side. I'm going to pull this up. And at least I think when we had the breakdown on the weekly and the daily in that general neighborhood, 1675, 1697. Come on. Okay. There hadn't been any reasons to try to go long silver either. So, we're kind of in no man's land down here on silver. And the good news is it hopefully eliminated one side of the marketplace for you, being the long side. Again, it's similar to gold. The only way I'd, even consider, this is our 240-minute right now I'm showing, the only way I'd even consider trying to nibble on this now is if we had some new profiles appear. Okay, I'm hearing that we've got Mike from Thailand on the line. Mike, are you okay? He dropped. Okay, no problem. We can try him again in a little bit. Okay, seems like the connection's getting better here. All right, let's look how some of the usual suspects of the stock world have acted in the latest run-up. And the cool thing is we've talked about the IBM trade here and how you probably need to possibly opt out on longs on this thing. It could head a lot lower. And we talked about the action here. This is not the kind of action you want to see of people clamoring to buy something. And when we got into inflection points, namely 165.45, it was kind of almost not a free trade, but it was just kind of like licking your lips. Like, thank God we let the market come to us and we're able to short this thing again. All right, I'm here. Mike's back. We're closing blood profiles on IBM, by the way. But Mike, are you there?
Yes, sir. Can you hear me?
Yeah. How you doing today? How's Thailand?
I'm hanging in there. I'm short, so that should speak a few things here and there. But anyway, yeah. I'm not surprised about what's happening. But so, how are you doing?
I'm doing good. I'm enjoying this yen trade. It's just been kind of like, the free trade of the decade almost. I talk about the yen going up, but it's actually devaluation of the yen. This is kind of a USD yen cross trade. What are your feelings on the yen these days? Because I know we talked about it last time.
Well, I think you said a mouthful before about how they think they're going to liquidate this whole market, and they think they're going to resurrect all these markets. What I see this whole thing is just it's a global thing. It's not Japan doing this thing on. It's not Japan doing this on its own. I'm sure you already know that. And anyway, I think this whole thing is just getting ready to blow up. We haven't seen a rise in the dollar like this since the 2008 blow up, and I think something major is happening. They're playing games with gold. They have that knocked down again, and I think we're just going to see blow-ups come from out of nowhere.
I think I'm with you on that. I just can't, I can't try to pick a top personally or technically until we start seeing. You trade, I trade, all the guys listening to this show probably trade, and I've learned a long time ago, even though there's so much insanity out there, when I try to outthink what's going on, and I hear you loud and clear, and I'm on board with it, man, this is going to end so ugly. We've never seen the ugliness that's going to come, but right now, you almost just got to say, okay, I've got some great vehicles out there that there's some people playing games with. Why don't I actually try to make some points while there's some some companies and countries, if you will, rigging the game? You can't stand in the way of these things until they kind of show their hand that things may be turning, and that's kind of my feelings on it, Mike.
Yeah, I mean, you're right, and I think the safest bet here. I have the bulk of I have my core investment in gold bullion. I've had that for years.
Okay.
And anyway, I'm just playing here, and I'm not doing good trading lately. And but here's an idea I have. I want to run it by you, and I don't expect a quick answer. This is going to take a day.
I tell you what. I tell you what. We're going to break. Can you hang around and then let's hear that idea after the first break? After the last break here.
Sure.
Thanks, Mike.
You got it.
Thanks very much. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi, guys. Welcome back to the show. And, Mike, are you still with us from Thailand?
I hope so. Can you hear me?
Yeah. Let's talk. Let's finish up with that idea you had there.
Okay. What I've been looking at is this ETF called SMN. That's Samuel, Michael, Nancy.
All right, pulling it up right now.
Okay, and it's the ETF that goes short. It goes short basic materials. Now, if you bring that on a long history, that did extraordinarily well. Out of all the ETF, out of all the ETF shorts, that's the best one I can find that did the best. Now, getting back to the dollar. Now, why am I saying that? It's short. It goes short basic materials.
Okay.
Now, they're sending the market higher on an extraordinarily higher dollar, and this does not make any sense. Okay.
No. From a classical standpoint, you're right. You're correct on that. Yes.
Right. So now, what do we do here? It's obviously rigged. It's obviously manipulated. I had a long talk with somebody last weekend about what things are going to happen. Everything internationally trades in dollars, as you know.
Right.
So if that's the case, you got to see things blowing up left and right, because all of a sudden, with the dollar going through the roof, all these countries around the world, and I know you know this well because you live in Asia as well, you get to see what effect. I mean, people have to buy stuff that's priced in dollars. One of them is oil. And even with oil going down, and you know oil is not cheap outside the United States. Everybody else pays a lot of money for oil.
Yes, they do.
And that goes for all commodities, you know, steel, everything. So as you have this dollar skyrocketing, you know, this game can't continue where they're going to devalue. And the Japanese stock market appreciation is not being, it like sort of ran out of gas. You know, it's not going to keep pace with their yen devaluations, and it sounds so ludicrous about what they're saying. They're saying we're going to buy stocks with that new pension fund they have, with their government pension fund. We're going to buy stocks all around the world. So they're going to do the whole world this big favor of buying all these stocks, and everyone's catching a whiff of this. And I wouldn't be surprised. Yeah, we'll have a strong opening today in the U.S., but I won't be surprised to see a big sell-off. You see,
reversal. Yeah. Well, I mean, you're right. I mean, those classic relationships. I mean, since 2008, 2009, they started dismantling all those classical relationships. And you're right. I mean, how does the Nikkei get the benefit of the devaluation of the yen just by a default thing, and the U.S. stock market is just a complete craziness when it comes to the dollar getting, increased valuation and the U.S. stock market going up at the same time? It doesn't make any sense. Mike, I really appreciate you calling in. I'd love for you to call in tomorrow because I don't think we've actually finished this conversation. But we got to go to, we got to end the show, and it's been great to have you on again. Have a good time in Thailand, man. Weather's starting to break over here a little bit.
Yeah, all the best to you. All the best to you, John. Thanks for taking my call.
Thanks again, Mike. Guys, stay tuned for Steve Rhodes. He's next, and we'll pick it back up again tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.